Welcome to Deloitte's Debrief webcast series in Asia Pacific. Our webcast today is from our indirect tax series and it's titled Invoice Management System being introduced for GST in India. My name is Shrenik Shah and I'm a partner in Deloitte India. I have the pleasure of hosting today's webcast with you. We have a distinguished panel, Mr. D.P. Nagendra Kumar, Harsh Sanklecha, and Sarvesh. Nagendra Kumar as a member of Indirect Tax in the Government and is now a senior advisor with Deloitte India. Harsh is a director with Deloitte India, and Sarvesh is an associate director with Deloitte India, both of them in the indirect tax practice. You may access our bios on the left side of the screen. And before we jump into today's webcast, I would like to take a moment to highlight some of the features of our webcast console. First, all the users are on listen-only mode. If you have content-related questions, you can submit them at any time in the Q&A box at the bottom of the screen. We'll do our best to respond to your question during or after the presentation. Second, if you are attending the webcast on your PC, you can minimize each box at your convenience during the webcast. You may also explore the icons at the bottom of the screen. And if you want to download today's presentation as well as the related publications, please go to the downloads and links box. On the other hand, mobile device users can view the slides and answer the survey on the screen. Finally, if you require any attendance record for this event for CP credit, you will receive an automated email with CP certificate after watching for 40 minutes of this webcast. Okay, so now with that, let's now proceed with the webcast and let me give you an overview of the topic that we're going to discuss today. Invoice Management System, or IMS, is the latest and possibly biggest change in the GST compliance requirements as application beyond taxation. We will first explain what IMS is all about. What are the policymakers' intentions behind introducing IMS, and what does the eventual situation look like? Thereafter, we will go a bit more deeper and granular and explain the nuances, concept, and mechanism of IMS, including the dates, the actions to be taken by both buyers and sellers, as well as certain typical scenarios, including around credit notes and others. IMS's implications are beyond tax. It's not just the way to claim input tax credit, but it also regulates the payment to the vendors and it can improvise supply chain management for any organization. And therefore, we will discuss how introduction of IMS would impact areas beyond tax. And any compliance in GST is incomplete and inefficient without the use of technology. So, discuss how the use of technology can help you be compliant with IMS and how we at Deloitte are helping our clients to be compliant with IMS using technology. And towards the end, if we have time, we will have a short Q&A session. If you have any questions, please ask them in the Q&A box in the console. With that introduction, I'll now invite Mr. Nagendra Kumar to introduce to all of us and share his thoughts.
Yeah. Thank you, Mr. Nick. Good morning, everyone, for joining this webinar. Invoice Management System is the latest offering from the GST and portal for the benefit of the taxpayers. As the participants would be well aware, the Indian GST introduced in the year 2017 originally envisaged three types of returns: GSTR1, GSTR2, and GSTR3. While GSTR1 is an outward supply statement, GSTR2 is basically supposed to be a confirmation from the recipient side of having received the goods and services, and thereby the credit gets validated. And GSTR3 is the liability return where the tax defrayal is reported. Unfortunately, because of the technological challenges, the GSTR2 and GSTR2 could not be implemented, and also the GSTR3, consequent to which the government introduced a consolidated return in the form of GSTR3B. The GSTR3B is a summary document, and the GSTR1 gives the granularity with regard to the invoice level details. The matching of these two returns, one at the consolidated level, another at the granular level, led to a lot of technological challenges. And the government evolved over a period of time a return called 2A, which used to be dynamic. And thereafterwards, I think an introduction of GSTR2B gave some sort of a static, but it left still a lot of desirable features in terms of two-way matching. The introduction of the invoice management system on an optional basis from 1st October 2024 has tried to address this lacuna in the GST system, whereby the supplier uploads the invoices at a periodical level, and it could be on a regular basis, on a daily basis. The IMS dashboard will make it available for the recipient to view and take appropriate actions, including accepting the invoices or keep that pending, or for that matter, even to reject the invoices. The moment this accept, reject, or pending option is exercised by the recipient, the supplier side obligations are validated, and thereupon the credit integrity is ensured for the recipient side. I think the main purpose of the invoice management system, as Srenik mentioned, is to secure the input as credit for the recipient, and also to bring in certain amount of information which will get auto-populated into the ITC ledger. The introduction, though it was optional to begin with, I think the government is very keen to make it mandatory before the end of this year. I think the taxpayers have been given a considerable amount of time in terms of working in the system and integrating their backend system, so that I think when it is rolled out on a mandatory basis, everybody is prepared and ready for implementing from the day one. We have been operating this IMS through the test infrastructure, and also worked with the government closely in terms of bringing some of the key points for clarification. And the government has conducted series of interaction with the taxpayers and other stakeholders, and attempts to refine the system to ensure that when it is rolled out, it becomes absolutely seamless and without any glitches to the taxpayers in compliance. Now, there are challenges in IMS, especially with regard to the credit notes. The government has made it in the initial phase of the optional rollout that credit note acceptance or its rejection or pending should also be on par with invoice. But the industry and the business has gone back to the government to tell that the issuance of the credit notes could not be equated similar to the invoices. While invoice could be accepted, kept pending, or rejected in a tax period wise, subject to the maximum period by which the law provides them to make any adjustments by subsequent year by 30th November. In case of the credit notes, I think the acceptance in the next tax period would be next to impossible for the business, given the dynamic requirements of the business needs. The government is reconsidering this position, and hopefully when this system is made mandatory, adequate leniency is given in terms of acceptance, keep pending, or rejection of the credit note as well. With this important reform undertaken by the government, I think what the taxpayers could expect in the days to come is certainty with regard to the input tax credit eligibility, and a system validated matching process. Thereby, I think the difficulties which either to experience by the taxpayers in terms of mismatches, which led to slurry of notices being issued to the taxpayers for providing clarity, I think that will remain past. The invoice management system also helps in doing the business reconciliation, as Srenik put it across, with regard to receivables and the vendor management system. And it will also be business friendly in terms of their payment obligation to the vendors as well. I think overall, I would say that the introduction of invoice manager system is an important step and a milestone in the GST journey, and an auto-verified and two-way confirmation of a transaction between the selling dealer and the purchasing dealer would definitely be to the advantage of the taxpayer in terms of claiming the certainty of the credit, and also to avoid any subsequent questions or notices issued for the mismatch of the input tax credit across the value chain. I think the nuances of this important initiative, I'm sure I think Arsh will explain to you as to what this system means and how it is proposed to be operationalized. Thank you.
Thank you, sir, for very interesting insights around IMS. And with that, let's move to question number one for the day. question is, please indicate your organization's readiness for implementation of IMS. And the options are fully adopted and are actively taking actions on IMS, or it's still a work in progress, or you're not ready, possibly need more time to be prepared. And the last option is that you're unclear on the applicability of IMS and its impact on your business. And while we wait for the results, I thought I'll just share an interesting fact about IMS. Conceptually, IMS was originally envisaged to be introduced along with the introduction of GST back in 2017. And the government also designed certain flow for how the acceptance and rejection of invoices between the two parties would work. But the government then decided to defer the implementation because they wanted a GST to be stabilized first and the compliances to be stabilized first, and thereafter e-invoicing and thereafter the IMS being introduced. And as we see the results on the screen, they're still loading, but interesting one. Especially, I see a high number of participants mentioning that it's still work in progress, and it fits with what we're observing as well, because there are various amendments being done in the IMS. The government is also calibrating its approach in mechanism around IMS, and naturally so your readiness for IMS. Also, an interesting number around the participants clear about the implication IMS. And like Deepan sir mentioned, the government intends to make it mandatory in a true sense by the end of this year, and therefore it's a real time for waking up to kind of prepare and then be ready for IMS, because it has implications about your tax function. Right, with the background IMS covered and some interesting results coming in, I'll now invite Sarvesh to share the concept and mechanism of IMS in the next few slides. Sarvesh, over to you.
Thanks, Shainik, for briefing us on the invoice management system. Hi, everyone. Good morning, good afternoon, and good evening. I will now take you through a detailed walkthrough of the invoice management system, how it was implemented, and how users have been engaging with it over the past 10 months. As we discussed, IMS was launched on the GST portal in October 2024 as an optional feature. This means recipients can choose to take actions on invoices. If no action is taken, those invoices are treated as deemed accepted. Now, under IMS, recipients can view real-time data reported by suppliers in their outward returns, specifically in Form GSTR1. These sales transactions are visible on the recipient's IMS dashboard on the GST portal. Recipients have three options to act on each of the invoices. First, they can accept the invoice, which confirms that the invoice belongs to them. Once the accepted, the invoice becomes eligible for input tax credit in GSTR 2B. Second, they can reject the invoice. In that case, it won't be considered for input tax credit and will move to the rejected section of GSTR 2B. And third, if the recipient is unsure, they can mark the invoices as pending. This puts the invoice on hold and it won't be considered for credit and will carry forward to the next filing period. If no action is taken at all, the invoice is treated as deemed accepted, and just like an accepted invoice, it will be included in GSTR 2B as an eligible input tax credit. One important point to note, once an invoice is marked as accept or reject, and the monthly return, that is GSTR 3B, is filed, the invoice will no longer appear on the IMS dashboard. Only the pending entries will remain visible. So once GSTR 3B is filed, recipients cannot go back and change their actions. With IMS in place, recipients now have the flexibility to regenerate and revise their GSTR 2B multiple times, right up till the filing of GSTR 3B. Currently, some entries like imports, RCM, and ISD credits are not part of the IMS, but GSTN has plans to include these in the future, aiming to make IMS a single platform for managing all the input tax credits. Also, in certain cases, GSTN has restricted the use of pending option. For example, in case of credit notes, where the supplier has reduced their tax liability, recipient must either accept or reject the same. If they accept, their input tax credit will be reduced accordingly. If they reject, the supplier will have an option to the supplier will have to reverse the reduction and pay the additional tax in the following month along with applicable interest. GSTN has recently released a note announcing some relaxation in the IMS functionality, aiming at giving recipients more flexibility. One of the key changes is that recipients will now be allowed to use the pending option even for credit notes and similar documents. This is a significant shift from the earlier restriction where only accept or reject action were permitted for such cases. Additionally, recipients will now be able to declare the input tax credit reversal amount applicable on these credit notes directly within the system. Another helpful feature being introduced is the ability to add remarks for any action taken under IMS. These remarks will be visible to the supplier along with the action, making the process more transparent and collaborative. These changes are expected to go live on the GST portal in the last week of August 2025, and they are designed to ease the compliance process and help recipients finalize their GSTR 3B filings more efficient and on time. Moving to the next slide, let's take a look at the changes made in the GST compliance framework after the implementation of IMS and how these changes have impacted the overall GST compliances. Earlier, users had to claim the input tax credit based on the self-declaration. This means that they had to manually reconcile their purchase data with GSTR2B and enter the amount of ITC they wanted to claim. But now with IMS in place, recipients take action on each invoice, either accepting, rejecting, or marking it as pending. And this consent is visible to both tax authorities and the suppliers through the supplier's dashboard. Previously, most users would take an action only after 14th of the month once the GSTR2B was generated. But now IMS allows recipients to act on the invoices as soon as the supplier reports them in GSTR1, right up till the finalization of GSTR3B and GSTR2B statement gets updated accordingly. Earlier, the tax officers had no way to verify whether the suppliers has correctly reported the invoices due to the lack of the matching mechanism. But with IMS, officers can now directly compare the invoices reported by the supplier with those accepted by recipients, making it easier to spot the excess ITC claims. Back in 2022, GSTN has suggested a method to revoke an excess credit in GSTR2B as a temporary reversal to be claimed in later months. But now with IMS, only accepted entries are considered in GSTR2B. This means there is no excess credit and no need to make any temporary reversals. Previously, recipients would perform a single reconciliation with GSTR2B to finalize their ITC, but now with IMS, they follow a two-step process. They first reconcile the IMS data with the purchase data, and then they reconcile the finalized GSTR2B with the books. While this does mean a duplication of effort, GSTN's ongoing reforms are expected to streamline this process soon as well. Earlier, recipients had no option to reject credit notes, which automatically reduced their ITC in GSTR2B. But now with IMS, they can choose to reject such credit notes. This means the reduction won't affect their GSTR2B, and the supplier who claimed a reduction in liability will have to reverse it in their GSTR3. I'll now invite Shrenik to take up the next set of polling questions and help us assess our readiness for the IMS.
Thanks, Sarvesh, for interesting insights around the polling question is on the screen now. When IMS is to become mandatory, which of the below would be your primary concern? And the options are technological challenges, naturally, operational disruptions, training requirement for staff as to how to comply with IMS, and possible increase in compliance burden because this is a new requirement for compliances, and then you will have to have additional manpower, staff, as well as the technology to be deployed for complying with IMS. And as we speak, the results are getting loaded, and please choose one of these options. Again, a large majority of the participants are responding that the possible increase in compliance is going to be a major concern, and and training required from staff, because one is the compliance will definitely increase, because this is an additional step in your overall compliance process before you can take in tax credit. And once it becomes mandatory in its true sense, you will not be able to take in tax credit without taking an action on IMS. Again, training of staff is again very important, because unless the staff is trained, and we are talking about not simple scenarios, but the situations where what treatment needs to be given to credit, what treatment needs to be given to certain transactions which are not the regular ones. It will need understanding from the staff to ensure that the implication on input tax credit as well as the tax liability is adverse and not thought of. And, thanks for responding to this question. Let's move on to the next section now, and I would like to invite Harsh to talk about the implication of IMS in tax, finance, and beyond. Harsh, over to you.
Thank you, Shrenik. Hello, everyone. And I think that polling question was rightly placed to understand, yes, there are certain concerns like any other new change being introduced under the laws, specifically for indirect tax laws in India. Tax compliance, tax assessees usually see that, okay, there's going to be a change in probably the way to do compliance. Having said that, there are a lot of positives that can come out of Invoice Management System, or IMS as we call it. And what you see on your screen are just few of them. And please note, these are not just tax impacts or tax positives, but these are actually business enablers. IMS is certainly for us how we view it as a business enabler for all of you. And if you ask how, then let's get into some of the details. So IMS will enable transparent communication between the customer and vendor, and will also help you preempt the behavior. Now, when I say that, what do I mean? The answer is very simple. IMS gets generated, or the invoices get pushed to IMS, and they'll be visible to the taxpayers as recipients almost on a real-time basis. Given that India has already adopted e-invoice on a massive scale, the threshold is pretty low. So as soon as the e-invoice is generated, the invoice gets pushed to IMS on maybe on the T itself or a T+1 basis. You're able to view the invoice. So even before you have actually received the supply of goods or services, you may know what kind of invoice has been raised. If there are errors with the supply, you can immediately get into a dialogue with the supplier for correction or for any amendments that are required. And similarly, as a supplier, in case a recipient has taken an action on your invoice or a credit note or your debit note, by accepting, it is good. By rejecting or by keeping it pending, it again gives you a visibility saying the customer rejecting the invoice is unlikely to make a payment of that invoice. So that clearly gives you visibility on your receivables and payables. That's how we are seeing IMS to be an enabler. Second, and I think this is a critical one, IMS is enabling automation for your accounting and reducing the errors relating to accounting as well as relating to credit matching. Reason being, again, with e-invoice APIs being available from the government, you as recipient can pull your e-invoicing data not just at an invoice level, but at line item level, thereby enabling you to start the accounting process with the actual data that the supplier has filed on the portal. Thereafter, you have IMS coming in. You can use that accounting or the pre-received accounting data for doing a matching, as well as creating your books of accounts with the actual invoice data that the supplier has filed. It can be done. The APIs are available, and hence IMS can become a very powerful tool to and get embedded into the accounting rather than keeping it as a separate process from the tax accounting function in the organization. IMS enables real-time matching, again, as a benefit of e-invoicing and the fact that IMS gets generated, invoices get pushed to IMS almost on a real-time basis. You are able to do a real-time matching with your purchase accounts or with the invoices in hand, and thereby enabling reduction in errors and a friction-free tax accounting as well as tax credit matching. You get ability to do the invoice credit reconciliation in a very clean manner, because as Sir and Shrenik voiced out and Sarvesh explained, e-invoicing, the records generated in IMS are available to you. You have your purchase registers available. Thereafter, making it very easy to reconcile, to create your own purchase register, your own input tax register, which are also visible to the tax officers. thereby making the reconciliation activity much more simpler and seamless, and also giving a better visibility to you for your compliances, to the tax officers for your compliances, as well as ability for you to forecast your receivables and payables. Lastly, but not the least, IMS also enables or gives you an opportunity to do timely corrections, because you have the data available to you much before the current format, because the current format says by 14th is when your GSTR 2B statement gets generated, and then you have to take action based on whatever has appeared in GSTR 2B. But with IMS, you should have an ability to look at the data much before and do corrections or engage in a dialogue with the supplier or recipient, as the case may be. Having said that, there are certain concerns that obviously the industry is voicing out, and that is what DPN sir did mention, that the government is also in a listening mode. They want IMS to be successfully launched and in a manner that it serves the purpose of the industry without creating much more additional burden to both the taxpayers and the tax officers. What are some of the concerns? One, the foremost is on the legal validity. But as all of us voiced out, IMS remains optional since October 24. Having said that, the government is keen on making it mandatory from a day and likely to be by end of this year. Second, the complexity of the IMS mechanism. As Sarvesh did explain, there are nuances on IMS, how actions are to be taken, what could be the impact of those actions. While it appears to be complex, but with the help of an intermediary, it is much more simpler to process and to accept, as well as when you work hand in hand with your finance function, it can work wonders for you. It's an evolving landscape. All of us in India have seen multiple GST advisories coming in, frequent changes coming to the IMS, but it's all for the good, because as Sir mentioned, the government is working on making IMS more and more user-friendly, listening to the taxpayers' concern, and thereafter going into the implementation mode. Time for adoption, it is lacking, is what the industry has been voicing it, and accordingly there have been representations to the government to make IMS mandatory only from a go forward date, that too once IMS is fully functional. We are hopeful that the concern gets addressed. Solutions for handling erroneous rejection. Again, this is a point that has been brought up by the industry, that wherever customers are erroneously rejecting any invoice or credit note or debit note, what should the supplier do? Though there has been advisory on repushing the records, thereby not incurring any additional liability. Having said that, the portal mechanism are still to be enabled. We should be seeing that in coming days, but this was more on the business impact side of things. There is an interesting question for you, I think, after the next slide, and we'll request all of you to as well participate. If we go on to the next slide, now from an adoption standpoint, what are some things that organizations need to keep in mind? As we called out, IMS is here to stay. The government is keen on making it happen. In our first question, where participants did highlight that we are not sure of the impact of IMS, so IMS is going to stay. IMS is going to come. Accordingly, it's all in the interest of the industry that we are on the right path for adoption. What it means is we need to invest in adopting this particular solution, and what it would require is, one, from a system perspective, the IMS flows need to be embedded or integrated. Training of staff on the functionality is again an important concern, and when we say staff, it is not just the tax function but also the finance function, because IMS is going to get both the functions on the same table in order to be successful. Supplier dependency is quite high in IMS, because whatever is reported by the supplier will appear in an IMS, and the recipient will have an option of accept, reject, or keep something pending. Thus, inaccurate reporting by the suppliers becomes critical, and that leads to the point that there has to be an increased dialogue between the recipient and suppliers. Rejection management is a key to IMS when it comes to suppliers' liability. Any rejection, while it also gives you a foresight as into the recipient's behavior that the invoice may not be paid. Having said that, any incorrect rejection could lead to credit losses as well as additional liabilities for the supplier. Partial rejections right now are not supported by IMS, but this is something that has been called out to the government as well, wherein if, for an example, you procure 100 quantity of goods, but what you have received is only 90, thus 10 are not received. Now, in that case, technically the law says the credit should be available only to the extent of the goods which are received, and thus there is a partial rejection scenario. Now, what happens in that particular scenario? How will IMS unfold is something to look out for. I now hand it over to Shrenik for bringing up another interesting polling question to hear the industry's voice.
Thank you, Harsh. And now let's go to the next polling question. And the question is, which aspect of IMS functionality are you most interested in exploring? And the options are accepting or rejecting invoices on a real-time basis. Number two, impact on ITC reconciliation. Number three is blocking vendor payments due to foresight into the vendor actions or quality of the vendors. And number four is addressing the rejected invoices. Uh, this is something which is very critical because all of these would have an implication not just on your ability but also on your input tax credit. And while the responses are coming in, let's load the results. Right. You see some participants still responding, but impact on ITC reconciliation seems to be clearly the feature which many participants want to explore. Of course, in addition to addressing the rejected invoices, because that becomes again a nightmare or a pain for many of the taxpayers. And of course, blocking vendor payment seems to be not many participants important area, because unless the vendors are compliant with their uh, obligation under IMS, you probably may not want to make full or partial payment to them. Okay, thanks for the responses, and let's move on to the next section where Harsh and I will discuss the business impact of IMS on the enterprises. Harsh, over to you.
Yeah, thanks, Shrenik. So, thank you for the interesting answers. And yes, input credit matching and impact on the rejections is something to watch out for in IMS. What it means, what we have captured here is something that we just discussed a couple of minutes ago. It is important for the process setup for tax and the finance team. Both have to go hand in hand for IMS to be successful. Important to note that the early adopters of IMS have cited that vendor communication is the key to IMS success. In fact, you can have it implemented in a manner that along with your vendors, and it could make your entire credit matching process, the inward supply process, much more simpler when you have schedules set up for how can the credit notes be issued, in what cases the credit notes get accepted, in what cases it will be rejected, so on and so forth. Another important point to note is that after filing of the GSTR 3B, it should be avoided for for an organization to reject any documentation which was already accepted or an action has been taken, because as per the current framework, if a document is rejected which was previously there as accepted in your GSTR 3B, then it will be removed and the input tax credit cannot be claimed. So this could lead to a loss of credit. When in doubt, it is better to keep the document pending so that a necessary action can be taken appropriately by doing the necessary investigations internally, where the invoice is, whether the goods are received, whether the supplier has filed the return, so on and so forth. Consider consultation with the recipient before issuance of a credit note. Again, why we are harping so much onto credit note is a credit note rejection could lead to a direct addition to the supplier's liability. And that is why it is important that credit notes, once issued, should be correct and should be accepted by your recipient in order to make it seamless for you from a tax compliance perspective. Else, you could be looking at additional tax liability. In order to take the actions in IMS, a user can either reconcile the input credit register that is maintained currently, the same process continues, with the IMS data, and thereafter take the accept, reject, or pending option. Or else you can also use the GSTR 2B, because GSTR 2B continues even to date, and it will continue is what we understand. And accordingly, that follow the process of input credit matching in order to avail the credit. Now, it is again a critical piece of information. There have been sound bites, there have been advisories that the GSTR 3B has the input tax credit section, that may soon become non-editable. What that would mean is your actions taken in IMS would populate your input tax credit in the GSTR 3B, and that becomes a non-editable field, which means a confirmation from your end to the tax officers that this much credit I am rightfully eligible for, and hence I have availed that in a rightful manner. Thus, what our recommendation is early adoption, because you get a runway to test the system of IMS, see how it is integrated to your internal systems, your finance processes, and thereafter, if there is an issue that is being foreseen, maybe the right time to bring it up to the authorities' attention. Invoices which are kept pending, an invoice or credit note or debit note, anything which is kept pending for whatever reason, has to be necessarily actioned out by the time limit prescribed in the law for which is the October return to be filed by November. There technically the law says November 30th. You need to take an action, else that record becomes time barred, and the taxpayers would then lose out on the credit. So these were some of the key consideration from an IMS perspective, and I would now request Shrenik to introduce us to the next polling question.
Thank you, Harsh. If we go to the next polling question, again, an interesting question which you all will be currently resonating with. But essentially, which of the below challenges in managing invoices resonate with you currently? And the options are manual data entry errors, uh, delayed invoice approvals, ITC reconciliation issues, or inability to take partial actions on IMS. Again, if I'm a client, I'm on your side, I would select all of these because all of these are the burning issues and then would impact your compliances. But I'll request you to choose the one which is the most burning issue or most resonating challenge for you. And as we have the results being loaded, in like the previous questions, pretty interesting outcome. ITC reconciliation seems to be the most commonly encountered issue as per the participants, and followed by inability to take partial actions. And this is an issue particularly in certain industries where partial invoices are accepted or rejected, but with IMS coming in, the possibility of having this is not there. Of course, there are some participants who've also responded stating the delayed invoice approvals and manual data entry errors are also challenges, but clearly ITC reconciliation seems to be the issue encountered by most participants who responded. Okay, thanks for your responses. And now let's move to the next section. I'll invite Sarvesh to throw some light on how we at Deloitte are helping our clients to meet the challenges and the compliance requirements under IMS using our technology solution.
Thanks, Shrenik. We have seen how the IMS currently available as an optional feature has a potential to transform the monthly GST compliances. Once GSTN mandates it IMS plays a key role in locking GSTR 3B from both liability and credit perspectives. That is why it is important to start with IMS now if you haven't started already. This way, when it becomes mandatory, your business won't face disruptions or incorrect input credit claims, which could lead to working capital issues and mismatches between the GST returns and your books of accounts. Now let's talk about how an authorized ASP/GSP solution like Deloitte's bolt-on can make IMS compliance easier for both recipients and suppliers. It helps ensure accurate reporting and reduces the complexity during audits and assessments. From the recipient side, bolt-on allows the user to fetch invoices, debit note, credit notes reported by a suppliers on a real-time basis. It generates an Excel file that helps the user to identify which invoices are eligible for input tax credit based on the vendor filings. Unlike the GST portal, which provides the GST MS data and takes around 20 minutes per registration, Bolton delivers multi-GSTN's data in just few seconds, improving efficiency. If the number of invoices is small, recipients can manually review and take action. But when the volume is medium or large, actions can only be decided after reconciling IMS data with your purchase records. Doing this manually or over an Excel is an inefficient way and error prone. Bolton solves this by automatically reconciling purchase data with IMS across multiple GSTNs and even suggests actions for each invoice, making the process smooth and reliable. Currently, the GST portal does not support bulk actions on IMS invoices. Users have to act on each invoices individually, which is time consuming. Bolton simplifies this by allowing bulk actions across multiple GSTNs and provides a one-click solution for one-click option to save all the actions directly to the GST portal. IMS data still doesn't include ISD credits, import credits, and RCM entries, which are currently only available in GSTR2. So users needs to perform another reconciliation to ensure they are claiming the right credits. Bolton helps with this too in reconciles purchase data with the GSTR2B and support 3B preparation in lines with the best practices and government guidelines. Another limitation of IMS is that once an action is taken and GSTR3B is filed, the invoice disappears from the IMS dashboard. Bolton addresses this by maintaining a historical repository of IMS invoices, their reconciliation status, and the actions taken so the users can refer back when needed as well. Now let's look at the supplier side in the next slide. Bolton provides a real-time visibility into invoices when reported by the suppliers and shows the actions taken by the recipients. While GSTN offers GSTN-wise month-wise data on its GST portal, Bolton gives a consolidated report across multiple GSTNs and months, which can be used for various compliance and audit purposes. Since recipient action are part of Bolton IMS offering, suppliers can easily identify credit notes or other similar documents that were rejected by the recipients. This helps them to understand how these actions will affect their next month's liability and will take corrective actions in advance. In simple terms, Bolton allows the suppliers to pull month-wise GST and wise document level data that helps in identify the additional liabilities which has populated in their GSTR3. It also supports correction mechanisms for rejected documents as well, ensuring that the compliance issues does not disrupt the business operations. With that, I would now invite Shenik to walk us through the best business practices for managing the IMS effectively.
Thanks, Avish. Can go to the next slide, please. All right, go to the previous slide. Sorry, Sarvesh, have you covered the slides? Right.
Yes, Shenik.
Okay, I think we have covered the slides, and now let's move to conclude the session. And before we conclude, I'll now request DPN sir to share his concluding remarks, and thereafter we take up the Q&A. And I see a pretty interesting set of Q&A in the chat box. So DPN sir, over to you for concluding remarks, and thereafter we take up the Q&A.
Thanks, Nick. I think our presentation covered in all detail the salient features of the IMS and the rationale behind introduction of IMS by the government, and also exactly what need to be done by the business to be prepared and ready as and when this IMS is rolled out on a mandatory basis. One of the important thing what we have learned in the last uh, 10 months or so since it's rolled out is that the industry has a lot of concern with regard to how the system is going to work. I think particularly when we are talking about numerous invoices needs to be uploaded and they have to be actioned upon in terms of acceptance, reject, or pending. We've also seen exactly some of the challenges with regard to the credit notes. One important point which came up during this initial phase of this optional scheme when it was in force is what is the legal framework for this. I think required amendments have been carried out insofar as the law is concerned in the Finance Bill 2025, which has since been passed. I think the enabling rules are already in place, but it may require some modification depending upon the IT functionality preparedness. But that's something which always can be done before actual implementation happens. GST on its part has been issuing advisories and keeping the taxpayers upfront informed about what are the things which are being reviewed in the optional scheme in so far as the taxpayer concerns express. I think by and large, I think the journey in the last 10 months have been one of, I think, consultation. I think with a focus on how to make the business comply with these important changes very effectively. During the four questions, I think most of them express the difficulty with regard to additional burden in terms of reporting. Let us not forget one important factor that in terms of the GST compliance, one of the major challenges faced by the Indian tax administration is with regard to the ITC availability. While the compliant and honest taxpayers have always been supporting important initiatives, there has been also some of the facets of the GST implementation in India with regard to the misuse of the ITC credit by the fraudulent entities. I think IMS will definitely work towards eliminating those entities trying to game the system and also facilitate a very reconciled ITC ledger, whereby I think subsequently during assessment audit, the taxpayer will not be put into difficulties. Like introduction of e-invoice created some amount of disruption in the beginning to start with. I think the gradual introduction of the IMS e-invoice helped the industry to be prepared and adopt it. It's almost now close to 5 years since e-invoice is in vogue. And currently, I think the e-invoice has become the default option for the Indian taxpayer. With the invoice and IMS, I think the ITC reconciliation is going to be completely automatic and system driven. The taxpayers would not have to additionally spend time and resources in doing a reconciliation. As Ash mentioned, I think it's a near real time data upload between the counterparty dealers. Effective communication and I think training the vendors is the go forward for us. But by and all, and the overall perspective, I think the IMS is going to address uh, the considerable challenge faced by the taxpayers in terms of the input credit claims and corresponding the matching provision which the law provides for. Uh, the time is now very ripe that those of the taxpayers who have thought of not acting upon this on the presumption that it's going to be optional, it's a wake-up call. I think we are still left with a clear 3 to 4 months timeline within which we need to be completely ready. When it is made mandatory, I think we shouldn't be running short of the preparedness so that I think when it's implemented, I think the takeoff is very smooth. And that's from my side, Shrenik. Over to you back.
Thank you, sir. We now have some time and we can pick up some of the questions asked by the participants. I'll go with the first question, and this question is for you, Sarvesh. While credit notes rejected by customers through IMS are being added back to the GST liability, the invoices rejected by the customers are not resulting in a corresponding reduction in the GST liability. Would you like to answer this, Sarvesh?
Sure, Shani. So, hi Anil, that's true. The invoices which are rejected by the customer, there is no option that a corresponding reduction will be done in your GSTR 3B for the liability which you have already paid. However, you can go with an amendment option and try to modify the amount of the original invoice. And in such cases, since the original invoice has been rejected by the recipient, you will have an option to make a downward amendment to the invoice. Directly, there's no mechanism that automatically, based on the customer rejection, your invoice value will be reduced from the GSTR 3. But in a manner, you can choose an amendment option to take the next action as well.
Thanks, Avish. Going to the next question. A company might have thousands of invoices every month. So would we need to accept, reject, or keep pending by taking action on each invoice, or it can be done in bulk? Marking each invoice individually might not be practical. Would you like to answer this as well, Savish?
Sure, Shanik. So currently on GST portal, there is no option to take an action in bulk like we see in GSTR1 and all. We have an offline utility functionality wherein you can prepare the data offline and push the same to the GST portal. Currently, the same is not available on the GST portal, but GSTN has confirmed that this is something that they are exploring internally and may come soon as well. In the meanwhile, you may choose one of the ASP GSP providers who can better help you in collating the information and take the actions on the same in bulk.
Right. Thanks, Avish. Moving on, another interesting question. If we are not going to avail credit of a particular invoice, if we accept it in IMS, then is it allowed to correct in GSTR 3B by removing the credit amount? For instance, we order food coupons for employees and we don't take the credit of GST. Can we accept in IMS and manually remove the amount in GSTR 3B? Harsh, would you like to answer this question?
Harsh, you are on mute.
You are on mute, Harsh.
Apologies. I hope I'm audible now. The answer to that lies in your question itself. IMS as a functionality is required to, or is introduced in order to create your purchase register as an ITC register. So your first step in accepting the invoice is correct because that means that particular service has been availed by you. Thereafter, on the reversal, again, your answer is right that in GSTR 3B, you need to do a reversal and show it as a permanent reversal or a temporary reversal, as the case may be. In your case, if it is food coupons, which are right now may not be eligible for credit unless you are bound by any particular legal obligation, then in that case, that credit has to be permanently reversed in GSTR 3B, thereby making the accounts fair and square. You have availed and you have also reversed the credit.
Right. Thanks, Harsh. Again, another interesting question, which is, I'm sure, will be faced by many. What if the customer rejects the credit note without taking any action on the invoice submitted in IMS? Sarvesh, would you like to answer this question?
Sure. So honestly, GSTN has given a that only the credit notes which has been rejected by the recipient will add an additional liability in the books of the supplier, in the GSTR 3B of the supplier. There is no mechanism that they match whether the credit note particularly belongs to an invoice or not. Likewise, this has been made in various recommendations to the GST authorities that this is something that is practically possible, that a customer may not avail a credit on the invoice and they take a reject action on the credit. GSTN has accepted this and came up with a mechanism which is something that is expected in August end, that I have also covered in my slides, that customer will have an option that they can accept a credit note and they can give a value, they can declare a value of how much is the amount of reversal that applies to them. So in a manner, if a customer wants to declare that there's no ITC reversal in their case, they can accept the credit note and provide a declaration amount as zero. So this is how GSTN has addressed the same as well.
Thanks, Avish. And this is last question that we'll take. Would the e-invoicing and IMS implementation for a majority of the taxpayers causing automation, as DPNs are pointed out, would it shift the resources focus from input tax credit reconciliation to invoice validation and finalization? Would you like to answer this question, DPN, sir?
Thanks, Shrenik. I think ultimately what happens in GST law, if you look at the basic ethos, It's the invoice which becomes the tax assessment document. The periodical reporting in the form of a return is a way of communication, but assessment happens at the invoice level. So e-invoice is basically the key document, and I think Ash did mention that the e-invoice captures not only the essential information in terms of the basic inputs, but also I think it can draw the details at the line level. I think with multiple rate of tax as in today force, I think that type of line level information will definitely be very helpful. I think going forward, I think in my considered view, I think IMS is not only to ensure that it is actually the ITC validation, but also I think in a way, I think once the counterparty transactions are validated from two-way communication, especially with 1A coming into picture, I think the liability of the supplier could also get fastened, and that could be also helping in pre-populating and helping the taxpayer in filing the returns in the days to come. Yes, invoice becomes a key document in the GST design. Over to you, Sunny.
Right. Thank you, sir. And thanks everyone for joining. That's unfortunately all we have for the time being. Thanks again, DPN sir, Harsh and Sarvesh, and special thanks to all of you, the participants who were able to join us and then ask some interesting questions. We would like to encourage you to fill out a short survey that will appear momentarily after a few seconds and tell us what you think about today's debrief. If you joined us late, please note that this presentation will be available in archive for future viewing. If you feel that others would benefit from this webcast, please feel free to share the webcast via the share this icon that you have on the debrief website. While we could not answer to all the questions which are asked to us, but we will try and respond to them in next couple of weeks. And if you think any of the other questions or comments later which are relevant, please feel free to reach out to us and the other speakers which we have on this. We're more than happy to talk to you and then respond to your questions. Finally, thanks for all of us at Deloitte, and thank you for participation in the Deloitte's today. Have a good day, good evening. Bye-bye.